All right, everyone. This is Marco Palmero, founder of Ulysses in Dubai. All right, everyone. Marco Palmero, founder of Ulysses in Dubai. How is it that you can analyze healthcare business deals in the United Arab Emirates and in the Middle East? Let's talk about it briefly, especially because I see companies, small, medium, big-sized companies, making mistakes, not from a technical standpoint, because of course there are people that are much more qualified than I am in analyzing a deal from a technical perspective, but it's more like a strategic approach that they're getting wrong, and that ultimately, makes them overpay for a deal or consider opportunities that shouldn't be considered. And so I want to share a couple of thoughts, ideas, and experiences that I had when looking at opportunities in analyzing deals. Now, the first concept that I want to discuss with you is this idea that the Middle East are a very complex region. So business deals are still growing, and they're not as popular as they might be in Europe and in America, where the M&A or deal market is fairly established. So there are a lot of nuances that people still don't fully get, but also a lot of tricky points that, if not considered, can lead a company into trouble. Now, what I've seen many times is that when companies look at opportunities they want to buy, they strictly rely on information that is provided from the source, and then they do their analysis the conventional way, following GAAP or other strategies that are commonly renowned. But what I've seen and what I've experienced on my own skin is that conventional way of doing things isn't necessarily the best here in the region. And the reason for that is actually quite simple. The friendly regulatory environment of the UAE is creating situations where a lot of businesses are not forced, or were not forced in the past, to report all the information in the financial performance of a certain business. And what happened was that companies relied less and less on these documents to prove their legitimacy, right? Because they had nothing to share with a third-party government or institution. Recently, of course, they're introducing tax and all these things, which are putting a little bit of boundary on institutions and organizations. But the point is, back in the day, that was not the case. And in many companies, what I've seen is that there was no reporting system to speak of. Now, why is that relevant to this conversation? Well, because the moment these companies go into the market and they look at selling their business, they know they're going to need to provide some sort of historical data that buyers can review. But without them having a clear picture of what the company is all about and what their performance was in the past years, they're going to be facing a very difficult challenge, which is either I don't sell my business or I try to find an alternative solution to mitigate this issue. Of course, many sellers go for the second option, but that invariably leads them to a point where they're sharing information that might not necessarily be accurate. And in some cases, the problem is amplified when third-party institutions put their stamp on certain documents and they kind of like approve them as quote-unquote legit. And you don't need to look far to see some of the big issues that happen from an accounting perspective here in the UAE. You can check the articles online and find a couple of horror stories about it. But the reason why I'm sharing all this is to make you aware that in many cases, the information that you're going to review ain't going to necessarily be accurate, and they're going to be more complex scenarios that you need to face, and you will not have the ability to rely on pieces of papers to make your assessment and your analysis. Even for a small business, soft due diligence and all these processes will take significantly longer, simply because you need to consider more skeletons that might be hidden, and you are substantially wandering in the dark. Now, most people don't like to think that way, and some might think that I'm catastrophic when I'm saying this, but I've just reviewed so many deals that had these issues that didn't appear to be an issue when we were presented with the info on the company, the audits, or all these sorts of documents. But they ultimately ended up being a major concern once we got to the finish line. And some deals really didn't close for those reasons. And so if you are really considering buying a business in UAE, in Middle East, be aware that the kind of like box that you have been in from a due diligence and regulatory standpoint ain't necessarily going to be helping you in this environment. What I always say is that approaching deals with a very open mind is key here, and expecting everything from everyone is also very important, because it's going to help you in detecting issues that might not be an issue in other countries because of regulations, because of compliance that companies need to fulfill. But